Hello guys, welcome to the trading Parrot. A very interesting scenario is developing over the weekend. One pool located at 106k and a second pool right below the price at 100k. Both of them same magnitude, and we are potentially seeing a breakout on the 4 hour. In today's video, we're gonna see how that move up could potentially turn into one of the ugliest trap. We're not gonna forecast that, but we're gonna start sneaking there and trying to understand how could it be that market maker could get away with such an scary and unthinkable plan. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And thanks so much guys for the almost 6,000 views in the video from yesterday. I got tons of feedback, positive one this time on a 34-minute video. All of that while the attention on Bitcoin keeps going lower, crypto keeps going lower, and in this channel we are attracting all the people that do like data-driven technical analysis. So can we get really to that 1,000 likes? If we are doing that, and if you watch Game of Thrones and you remember that scene where two beautiful girls approach this dude to proceed with the ugliest ever torture that I can ever imagine, right after that, that dude loses the most important part of his body. Well, if we get 1,000 likes, that's precisely what we are doing today on a Sunday to the YouTube algorithm to force it to show this content to more people. I'm sure we're gonna get it. This video is gonna go straight into the data of the shorter term. If you want something like a Saturday, Sunday alpha video, that was yesterday, 34 minutes with everything that matters. You should not miss this video called Next Week Trap Ready. We're just gonna expand on that and see how we are progressing. I have also updated the Bitcoin status, and I'm gonna explain my train of thoughts on why I'm slightly changing the colors of the bearishness between 4 hour and daily, and that's kind of part of my hypothesis of what could come next. Let's start with CME. We are over a weekend, we close at 103.7 roughly, and price is currently pushing beyond that limit. If we get a pump over a weekend, we risk producing a CME gap. Those gaps on Monday tend to get filled very quickly, but this is a very special weekend because that could turn into the fourth CME gap that we form right below the price. So if we get a Sunday pump, the likelihood of closing 1, 2, 3, and 4 together is not very high, but 1, at the very least 1, is what we could say a low-hanging fruit. Obviously, in order to close the gap, if we go to 106k and we produce a gap below the price to close it, we need to go back to 106.7. That point there, by just closing number 1, is not enough to call it a breakdown. We have to go probably to CME gap 2 at that point to really break things in a bearish way. Notice as well that to produce a gap, we need to close Sunday candle, daily candle as well, weekly and daily, above 103.7. On the 4 hour, what are we seeing at the moment? And I'm gonna start focusing now on the RSI, and we're gonna have to do some due diligence in here because we had this fake out on Friday. So let's move the line right there, and let's move the support somewhere in here at around 50. We also have the PNR around 37. So let's update that support to 50. So let's just focus on the 4 hour, and for a moment, let's ignore the rest of the time frames. Later, we are gonna try to put all the time frames together in a single picture. 4 hour had a breakout, it turned into a fake out, it came back into 47, which is the same lows where we put the hidden bullish divergence prior to putting a new low. That produces a pattern that on the 4 hour is bullish, right? It's an inverse head and shoulder in the momentum. We couldn't put a new low on Saturday, I mean a new lower low, and that after the two hidden bullish divergences managed to produce a breakout on the 4 hour. So here is where I want you to stick with me, leave aside that the 4 hour has some bullishness, and let's try to make a story together with what comes next, which is the daily time frame. In the Bitcoin status, I already wrote down everything. It says momentum was lost, we were in the middle of a pullback, and I'm gonna write down pullback seems completed after breakout, and this is an RSI breakout. price. I already broke out on Thursday and it came back for 2 consecutive retests of the descending wedge, which is a bullish pattern. What I said is, at this point of the breakout, that price was getting ahead of itself. Usually, when price breaks out and RSI in this area hasn't, that spells a doom on the setup. And we can see that that already has affected the breakout, because we broke out, we went to 104.5 and we end up coming back to 102.6. So I will say that that has already fully or partially played out. What are we missing on the 4 hour? On the 4 hour, we are missing a higher high. We still don't put a move into 104.5. We got now the RSI breakout at a decent distance from the resistance, not like this one that ended up breaking out just 1 or 2 points above it. So that is a decent win for the 4 hour. If we were to do a retest on the 4 hour now, we have a decently sized 4 hour fair value gap below the price to come back and retest at around 103.350. By doing that, we consume the fair value gap and the RSI comes to test the trend line. Is it necessary? Is it mandatory? Is it guaranteed? No, but that is something healthy that will be nice to see. Right, 4 hour looks good. That's why I have decreased this from very light red into just red. We still don't have that higher high. We are moving in this direction on a Sunday. There were some anomalies in my expectations in the order of the breakout in going to that 102K, but I'm gonna degrade it to just dark red, which is a color that we could say that could turn very quickly into a dark green, which means that maybe we start having an actual uptrend on the 4 hour. On the daily, we need to also perform some due diligence. In here, we already lost the first line on defense on the daily RSI support. We retest the breakdown. We came down to just 60, and then after that, we had a higher high on the RSI. That was thanks to this move from point of control into the top of the range. After that, you can see that we are at an RSI of 69, which is the same RSI that we have around here. So RSI has been just going sideways. If you get an average between all these numbers there, probably the median is just 69. At the same time, price continues to go higher and higher. And every time it goes higher, it breaks another line of defense. We already lost on Wednesday the second line of defense, but still RSI continues to just go sideways. And that is one way of producing bearish divergences. And what we could see next, if that RSI 4 hour is correct in that direction, is a move into the liquidity that is in here. That is the 106 that ends the red at 106.500, but the yellow ends at 107.5. So there is some upside to be had there if we actually manage to get a pump over a Sunday. And if we do that, how is it gonna look on the daily RSI? Think about this. We lost that level on 30 of April, and then we went to test that line as resistance. That was a revenge rally. That revenge rally moved the price into the point of control, and then we came back for a retest at 93. That was the rejection of the revenge rally. So let's say we had something similar to that. A very frequent setup will be to just go into 74, somewhere around here, let's say between 74 and 75. I'm gonna place it at 75, assuming that it takes a bit of time. But of course, if this happened today and this candle that is in progress, the candle of Sunday, move all the way up, is probably gonna meet with the resistance at 73, which is of course 2 points less of RSI. So let's build a band of resistance right above the price using the reverse RSI, with the lower band being a pump on Sunday going into 73, and the top of the band being 75 with a move that maybe lasts up until Tuesday. That is just to give a little bit of headroom to this speculation, because moving into those highs is going to produce the fourth CME gap. So let's create that band between 73 and 75, and this is my band. It goes from 106.4, that will be a Sunday pump, and if we do it slower, that reaches 107.7. And here's the thing, on a daily basis, a move like this is not that different from a move like that went into the point of control, rejection, back down to 93. That move in the price is this one that goes into the next resistance, rejection, and comes back to the same place. So if you still cannot visualize it, that looks something like this and comes back into 103. Why will we come back there? Well, we need to close at least one of the 4 gaps. That is just a conservative expectation. Can we go beyond 106 into 125 and leave the 4 CME gaps behind? Yes, we can. Is that a likelihood of 98% of happening? No. It's probably, and I'm gonna give you a lot of headroom, it's probably less of 5%. Now, my opinion is that it's less than 0.5%, but don't tell anybody. Okay, so now continue watching the video, and I'm not gonna tell you what to do, and I'm gonna see if you can carry on watching the full video before going down there and writing angry comments that I don't marry a direction. TikTok generation is so addicted to just getting the answer. In Chile, we call it the potato straight in the mouth, like feeding a toddler. If you feel like a toddler, go there and write down comments down below like a toddler. If you feel like an adult that can see an opportunity on this, can use strategic thinking, challenge ideas, I invite you to write down what you think of this. Even if you completely disagree, that's a very interesting conversation to have. So I'm trying to build a case here for a potential move into 106. Potential, not forecasted, not guaranteed, because it looks like the 4 hour is breaking out, and I'm seeing how high it can get, and if it gets there, what is the highest likelihood to happen after. If you're still with me, now I'm gonna start complementing the thesis. So if you get into there and we come back into 103K, we need to see if we're just gonna have that fake move that we just had on the 4th of May before we went into a new high. So a rejection from here could bring back into RSI 60s and cool down for a little bit further, or it could get a full rejection and then come back and start a downwards channel from around these highs into 45. Let's remember that the final top, the top of the range of the RSI at these levels is around 85 at the moment. That is after 1, 2, 3, 4, and a 5th move there is still potentially likely. After all, that is the global support, resistance, I mean. So you're probably thinking, so why are you looking for excuses for the price to get rejected on the daily? And I'm gonna answer that. Well, momentum has been producing bearish divergences on the daily. We just confirmed a bearish cross on the MACD. The histograms are increasing into the red area. And someone is going to say, yeah, but we just went into the red area on the 8th of April, and that was an area to buy the dip. Sure, just talk to the Elliott wave guys that are down there in the comments as well, and they're going to say that we already completed 3 waves up of this move, and we are overdue for a pullback. We're not talking about a lower low relative to 74 yet or anything too scary, but just a pullback. So on the daily, I put it a little bit more red until we confirm that I'm wrong. It broke down the second line of RSI defense. There is an ambiguous structure of higher highs and higher lows, but still not direction. We have a hash ribbon capitulation signal, and the MACD bear cross has been confirmed. The 4 hour is starting to show a little bit of recovery, but that could help just to get into the daily rejection that comes immediately after. That helps the price just to capture this. So are you telling us that we are not going first to 100K? Nope, I'm not telling you that. I'm just telling you that how it looks right now, I am leaning towards potentially this particular scenario playing first. So how do you invalidate that we're going to 106K first and not to 100K? I think it's equally likely that we go to 100K from the point of view of the liquidity pools because they are the same weight. But we just produce a 4-hour breakout that definitely needs to turn into fake out before we start talking about 100K. We need to break below 50 RSI to say, well, that was just another fake out to the upside. But so far we don't have it. I gave you the level that we need to defend, that 103.3. If we break below that 103.3, then we have this order block that was pretty bullish. If we can break that too, then we could be going into the 100K. By closing Sunday like that, we're gonna get a CME gap to the upside, which is bullish, and that could bring back the price up into hitting the 106K. I also want to mention, guys, that the US lost the final AAA rating. This is to do with the credit, and it was done by Moody. It dropped just to AA1, and it seems to be just perceived as something symbolic. There has been previous downgrades in the history before on the S&P in 2011 and Fitch on 2023. So this is the first time in history that the US holds not top tier rating from a major agency. Why did they do that? Well, structural deficits with not credible reversal plan, soaring interest payments, and fiscal gridlock that undermines confidence. And what are people saying out there? Where Barclays and JP Morgan downgrade was expected and likely to trigger panic. We also have WSJ and Bloomberg. Market response will depend on how treasuries and the dollar behave next. So we are going to keep a very close eye throughout this week on what's going on with gold, DXY, S&P, and the 10 to 30-year treasury yields. I published this article for free on my Patreon. I really want everybody informed of what's going on with this and how it can affect things, what to look up for from the point of view of the technicals to start to sniff that is not the case, that is going to be a mild reaction to the downgrade. Let's face it, the downgrade has the potential to produce a spike on the VIX on Monday, and it can also hijack the V recovery that everybody is expecting from the Nasdaq and the S&P. That of course has an impact on crypto, and this is not just FUD, this is awareness that I want to make as a point today. Let me know if you think that this is an overstatement that is not going to have any impact, or if you actually think that we should kind of embrace a potential rejection from key levels. After all, most people are already fully celebrating the V recovery of Nasdaq and S&P and comparing it to 2008 and to the COVID crash. At the moment, we are right there at weekly resistance. So just a few millimeters up higher on Nasdaq and S&P, and we get a weekly breakout to the upside. But also a rejection right from there can really spell a very bearish narrative. So a close eye on both things. So right after that short stop, and before we continue with the order block to see where is the liquidity and how are the whales right now placing their bets for this potential hit into 106. Remember that I have a link in the description to open a new account on Bluffing. You can get 15% cashback with this new campaign that ends on the 26th of May. This is a non-KYC exchange, so wherever you live, you can just deposit in seconds and start trading on leverage, altcoins, Bitcoin, and everything. And I got really good news, because now it's not just the 15% cashback, but you can also not pay for my Telegram charts and Pine scripts on my Patreon website by using this Telegram bot that belongs to Bluffing, that proves that you use my link to open the account and that you at least deposit $600 and start the trading. If you pass the requirements, you're gonna manage to enter to a Telegram group that belongs to me. You just say hi and I will send you access to Telegram charts, Pine scripts, and if you're quick, you can also access my TTP AI agent bot on Telegram as well. Right, enough from that, let's look at the Fear and Greed Index at 74. Still doesn't want to go into extreme greed. I really wanted all of you guys slapping yourself strongly, ending up with the pink cheeks and getting those free cups of coffee, because that's what we do when we enter into the extreme greed. Right, so we already know that where we have the liquidity pools in the short term, those are located at 106 and 100K. We know that they are the same size, and we know that potentially we are entering into an uptrend on the 4-hour, although I haven't yet confirmed that. That is still in a dark red. It could flip into dark green in the upcoming hours if we continue in this direction and we confirm support. After the capitulation signal that we have at some point this week, you can see that the MAs are pretty widely open, and that is a consequence of the hash rate to have pinched the lows multiple times. That drops those MAs and indicates that we are still in the middle of the minor capitulation. There is a slightly higher chance that during a minor capitulation there is also some pullback. It's not always the case, but it's something that at the moment I have in the summary on the daily to keep an eye for. On the longer term, the liquidity, let's not just get biased by the 106K on the short term, because on the longer term that liquidity pool ends at 109K. Right after that, we have a depression that is precisely at 110.4. That depression there is a potential recipe for not letting the price straight away to go and capture all the way to 115. It's kind of a rock in the middle of the way that you could step into, fall and hit your chin against the floor by assuming, oh, we have the red there. I think in this area in here we need to drop a little bit of oil in the pan so we can fry those eggs before we get them all stick to the surface. Ideally, the move to 106 should end up just like a higher high like this, and then coming back into the same range like we did around May 4. So far, this is just as flat as April. That liquidity is very visible on the past 2 weeks, but of course, if I increase the time frame, then we can see that 92.6 still wins. But hey, 106 is very close at the moment to the price. And on the liquidation map, it also looks like a pretty significant area with a decent chance that we go there. Also notice the past liquidations. There is a pattern. Here we get liquidations of shorts, then we get liquidations of shorts on the 8th of May, and since 8th of May it's been decreasing the liquidations against shorts. We are 10 days away from that. At some point shorts are going to get a little bit of love. Who is responsible at the moment for this move up? And I will say there is a big group in here that are going with very high leverage. They started at 102.9 and probably are big part of the responsibility of moving all the price to 104. Also, watch out with that because that tends to increase volatility. They tend to take profits very quickly. They use high leverage, and as soon as they see a decent bag, they just take profits and create cascade of taking profits. The bid and ask ratio remains very flat. That's typical from a weekend, and the delta on high block capital just shows at the moment 11K, which is pretty much the definition of nothing. It's extremely flat, and probably that is the result of having these two chunks there that are pretty much the same. On Market Monkey Terminal, we can see that they enter around 103.3. They hit the resistance with 622 at 104, and now is forming so far a bull flag. CBD has increased in this area, not significant enough to really say that the CBD has completely flipped bullish yet, but there's something. The selling wall is largest at 110K, but 105 there is 55 million. Fair value gaps are to the downside at 103.4 and 102.4. So even though I feel like I already wrap up multiple times the video, people really want to see a wrap up at the end. Again, I think there is a potential decent narrative for price to visit the highs. We are approaching that level with an increase of strength of the 4-hour, but at the same time in the context of a revenge rally on the daily. All of this again in the context of weekly and monthly against critical, strong, I would say strongest resistance that we should be facing. Typically, expectations are with such a huge resistance on weekly and monthly, we do pay respects to those and we tend to have a pullback. The pullback is never perfect. You don't hit those levels and immediately get a rejection. Typically, typically you do just a liquidity hunt up, come back down, rejection, clear early longs, and then second attempts. I am looking for those. I can be absolutely wrong on everything I say in this channel. I'm just a dude on internet sharing my ideas. I do not have forecasts. I just analyze potential scenarios or high likely scenarios. And in this case, going to those highs seems to be the next task at hand. The way it looks from the distance is as if it's going to go there and somehow fail. But if we get to that day and we are still there and we see a complete shift in something that we are not seeing now, you will hear it first from me as well. Would you like to trade $500 and then get to keep the profits and not have to pay? Well, that's precisely what you can get from my position airdrop. You get $500 to trade any of the coins in this list. All you have to do is find the Bybit link in the description, open that link, click register to claim. Just make sure that you actually make profits so you get to keep them. Thanks so much for watching. I'll see you in the next one. Bye bye.